Welcome everyone, this is Raja Banks, your host of the New York Session live streams, and welcome to one of the best, one of the best Forex education channels on YouTube right now. So, what we will do now is we'll do a short presentation on the difference between an exhaustion wick and a wick fill. These are very, very two important concepts, and I think a lot of people, they confuse between the two. So an exhaustion wick is basically a market structure where candles are rejecting zones, and that's where you see probable reversals in time frames, right? A wick fill is a direction where the market is heading, right? If you got a wick fill, the market structure is going to dictate that wick is going to get filled, whether price is moving bullish or price is moving bearish, right? An exhaustion wick is going to be a representation of candles or market structure, which will let you know that, okay, now we're going to have some sort of a retracement, or we're going to have some sort of a reversal, so on and so forth. So let's go into it. What is a wick fill, right? So we're going to identify what a wick fill is. Now, basically, whenever you have an uptrend, right? Let's say, for example, we have an uptrend. We have an uptrend and we have a candle that's closing like this, right? It's closing like this, and someone can turn around and say, okay, you know what? We have a bullish candle closing, and if you got a bullish candle closing, this means that there's a higher probability for the next candle to continue bullish and fill this wick right over here. Or, for example, what you might see is that maybe you see, market structure to the left-hand side, and price moves up and leaves a wick right here. Then we have some sort of a retracement and yada, yada, yada. And then you have candles forming bullish again, right? And someone can turn around and say, okay, you know what? Since we have an overall uptrend and price is creating supports at this point, there's a very high probability that this wick might get filled, right? Now, what does this mean when you look at market structure, or what does this mean when you look at, the candles themselves? So this is what happens. Let's remove all this, right? So we've done this before. So basically what this candle is, you have to see what kind of a candle structure you have once you have a candle closing bullish like this, right? So what happens here is, let's say this is a 4-hour candle. If this is a 4-hour candle, we got to break it down into 4 1-hour candles. So probably the 1-hour candles may look something like this. So we have a bearish candle right here making this lower wick. Then we have a bullish candle forming, 1, 2, 3, and then maybe, we have another bullish candle that forms like this. So this could be our perfect 4-hour candle, and this is a breakdown of the 1-hour candles, right? So now, before we do this, you have to understand what is the anatomy of a candle. What does a candle have most of the times when it forms, right? So whenever a candle forms, it has a lower wick and it has a bottom wick. When a new candle starts, now, we're not going to go into what if scenarios. We're not going to go into, what if candle has no lower wick? What if a candle has no top wick? What if this, what if that? Because if we go into the scenarios of what ifs, there are infinite amount of what ifs. So we're just going to go off a very basic principle, right? So bear with me. The next candle is most likely to create a lower wick, right? Perfect anatomy of a candle. And if this is a 4-hour candle, and let's say you're looking at gold, right? Let's say you're looking at gold. If you're looking at gold, and if this is a 4-hour candle, you know that on a 4-hour, this wick may be around, let's say 35 pips. If this is a 35 pip wick, this means you have an opportunity to have a wick fill, which also means that there's an opportunity for you to grab these pips if this is 35 pips, right? So on the 1-hour time frame, it may look something like this. Like, let's say candle closed right here. Now you have a bearish candle going down, creating like a retracement. You have another a candle bearish going down right here, 1, 2, and then you have, let's say, a bullish candle forming. So now you've created a support, right? You've created a support at this point. This is this move down is the creation of a lower wick on the 4-hour time frame. Once this lower wick has been created, right? And if price starts flipping bullish at this point, this is the scenario where you see, okay, first you need to identify how a support is formed. A support on the 1 hour time frame or the 30-minute time frame is formed as you have a bearish candle followed by a bullish candle. That means a support is formed. So if a support is established and if the trend is bullish, you have the 4-hour candle with a wick over here. Most people, what they're going to do is they'll see the support, they'll know that the next candle has a higher probability to continue up. They'll know that, right? But what's going to happen? You're not going to execute. You're going to say, oh, let me wait for the candle to break the high, or let me wait for another confirmation. And while you have these doubts in your mind, while you start thinking and overthinking that, okay, I should just wait a little bit more, I should just wait for another candle to form, what's going to happen is as you're waiting, the next candle moves up. We fill this range on the 1 hour time frame, and on the 4 hour, this becomes a wick fill, right? So don't be afraid of execution, right? There are moments, what will happen is that price will retrace, it will break this low before even moving up or even going up. We may get candles form like this, right? And price starts to go down and the 4-hour candle looks maybe, 4-hour candle looks maybe something like this going bearish in an uptrend. This may happen. The probability of this happening is very, very low, right? But the probability of price filling this wick is high. So whenever you're looking at wick fills, you're making sure that you're trading the potential wick fill in a trend, whether price is trending up or price is trending down. Next thing, right? That was point number 1. Point number 2 is always look for wick fills when there's volume in the market. Now, when do we have volume in the market? We have volume in the market at pre-London, at London Open, pre-New York, and New York Open. And then you have NYC and London Close. So these are the points where you have a lot of volume in the market. You got to keep that in mind. Always aim for wick fills when you have volume in the market, right? And the third point, right? The third point is a wick fill is probably going to happen most times when you have a body and the body is bigger than the wick, right? So this gets me to our second topic of this video, which is going to be exhaustion wicks, right? So let's take a look at that right here. Just bear with me while I remove all this. A lot of you people are looking at my shirt, which says Einstein. Trust me, I'm no Einstein. I just look at the markets a lot. I just look at the candles a lot. I look at the market structure a lot. So, Anyway, let's take a look at exhaustion wicks, right? So what's the definition of an exhaustion wick? The perfect definition of an exhaustion wick is, or an exhaustion candle, is when you have a body, let's say it's a bullish candle, and the wick is bigger than the body. When you have a wick that's bigger than the body, even if this is in an uptrend, this is not a good confirmation to buy. No, this is not a good confirmation to buy because price went up, rejected, and the candle closed a small body. So whenever you have a candle closing with a small body, that's an indication. Make a note. This is an indication of volume decreasing in the market, right? Volume's decreasing. What you want to do at this point is probably look for, let's say, an impulse entry. That's what you want to do at this point. An impulse entry would be perfect once the next candle goes bearish and breaks this low for price to move down. This is going to be a much better idea if you have a good grasp on impulse entries. Now, don't go crazy with impulse entries. Impulse entries are very hard. There's a higher level of failure in the start with impulse entries because you really got to build your confidence and experience in watching things happen, watching moves play out, watching volume drive candles up or down. You really got to increase that experience, right? So getting impulse entries, it takes a little bit of it's an intuitive process, right? So it takes a little bit of time. So whenever you see a candle with a big wick and a small body, this is an indication of an exhaustion wick, right? So there's a very high probability that the next candles are gonna so let's say if this is an uptrend right here, right? If this is an uptrend, you have candles moving up from here, like this, candles are moving up. And then you have a small body candle right here. So whenever you get the small body candle, it's a better idea to wait for somewhat of a retracement, right, in an uptrend. So you wait for some sort of a retracement. Once you get a retracement done after this exhaustion candle, wait for a support to form. Once you get a support formed, then there's a higher probability for the next candles to continue up if this is an uptrend. So whenever you're looking at the charts and you see an uptrend, and in an uptrend you see a candle forming with a small body, or if price is moving down, right? If price is moving down like this, I need to get bigger tip markers, and you get a small body bearish like this, this is an exhaustion here as well, right? This is an exhaustion here as well, because look at the size of the body of the candles. Big body, small body. Small body means there's an exhaustion happening, right? The volume going down is decreasing now slowly. So what you want to do at this point is maybe wait for some sort of a retracement, for a resistance to form, and obviously a resistance is formed once you have, a bullish candle forming after, no, my bad. Bear with me here. Once you have a bearish candle forming after a bullish candle, resistance is formed, and then you can look to trade the trend to continue pushing down, right? Taking the opposite trade or taking a retracement trade, it takes practice. There's a high level of failure once you start taking, corrections, you start trading retracements, because, sometimes when you're trading gold or pound yen, like most of my viewers here, you guys trade gold a lot, you guys trade pound yen a lot, and you guys understand there's a lot of volume in those pairs. So whenever you have a lot of volume in those pairs, there's a high probability that price, after having this exhaustion wick, can continue pushing up if it respects this low. There's a high probability that's going to happen. There's a lower probability that can happen because there's a lot of volume. So always aim to wait for some sort of a retracement, wait for a support formed, and then have the continuation going up, right? And waiting for a retracement, waiting for a support form, it's clearly explained in my other video. Probably the link is going to be here somewhere. It's called Reading Market Structure or something like that, right? So you have to wait for this. Exhaustion wicks are wicks where the wick is bigger than the body. Whenever you have a wick that's bigger than the body, that means exhaustion is happening, and it's happening on, the probability of exhaustion happening on time frames is probably going to be on the 30-minute time frame. You can take a look on the 1 hour time frame, because those are just confirmations, right? This is a confirmation of a exhaustion on the 30-minute time frame, 1 hour time frame, 4 hour time frame, daily time frame. Anything lower than the 30-minute time frame, those are weak confirmations. Once you have weak confirmations, stay away from it. 15-minute confirmation for exhaustion candle, I generally stay away from it. 5-minute, I stay the hell away. I don't mess with 5-minute confirmations. I very rarely go with 15-minute confirmation. So this is really important. So we talked about wick fills versus exhaustion candles. Hope this helped you guys. One tip I'm going to give you is to go over the charts, right? Go over this whole week's charts. It's Friday today. So go over this whole week charts and look to see when you had an exhaustion candle and what happened after that exhaustion candle. Only in volume times, only at times when there was volume in the market. You got to take a look at that, right? And then take a look at potential wick fills on the higher time frames. Wick fills, we also did a video about that on wick fills as well. Once you're looking at wick fills, look at, let's say, 4 hour time frame wick fills versus 1 hour time frame microstructure, or 30-minute time frame microstructure, or daily time frame wick fills and 4 hour microstructure, 1 hour microstructure, and you're going to learn a whole lot by just looking at the charts and anticipating what happened and anticipating what may happen in the coming weeks and months. So hope this helps. Take care. Good luck.